If you're looking out into social media to try to understand what's going on, just please bear in mind it's emotional by nature. All of these gasping faces and WTFs and all of those things are just simply clickbait. When it comes to trading and investing, you need a philosophy which is non-emotional. That is, if you want to make money and to keep money. Rule 138, all investors become traders every time they buy or sell. The key here is when you're buying and selling, as an investor, you're actually trading. Now, a lot of people don't understand this. They just think, oh, for tax purposes, I'm going to hold this thing forever. And then suddenly they see the market go red, and what do? Unfortunately, they typically sell. Now, what is the reason behind this? Inside YouTube and other social media platforms, whenever retail sees the price go down, it jumps up and down, it gapes its mouth, and it says, oh no, the end is near. Now, why does it do that? Obviously, it wants to action your fear. That's good for their click-through rate, but bad for your money. Okay, Ken, well, what's the solution here? I was told that when things go up, they go up forever. I'm not used to this idea of a pullback. What the heck is that? It's just supposed to go up. Well, in price, all price moves in a wave between structural support and structural resistance levels. So when you see a pullback, all you're seeing is an interplay between structural resistance and support levels. That's it. So why is Rule 138 important? If you're going to buy and sell, please do not do so emotionally. Unfortunately, you've already been set up to lose because some of the greatest investing advice in the world goes like this. Rule number 1, don't lose money. Rule number 2, don't lose money. Rule number 3, see rule number 1. That's exactly why you're selling when the price goes red. And unfortunately, people buy when the price is going green because they want certainty. They want to see the prices going up and up and up, and then they get certain right about near the top, and then they get a pullback. If you can relate to this, please drop a comment. When people first get into financial markets, buying at the top and selling on a pullback or around the bottom is a specialization that we all develop. Everybody develops it. So if you've got it right now, don't worry about it. You can get rid of it. But the idea is you have to know what you're doing. So many investors are actually just purely emotional traders. Unfortunately, you're going to hear people talking about crashes in crypto. No such thing. These particular percentages are nothing. Literally, they're nothing. The crypto market is really volatile, but don't let that be a problem. You need volatility. How else do you make a return? But you need to know where your structural levels are. Does this mean that all investors are emotional traders? Absolutely not. When investors have been through the price action, especially inside the crypto market, they understand that price is always moving in a wave between structural levels. They also understand that when structure impacts, it's going to cause a price reaction inside the market. Therefore, really good investors see that they understand where the structure exists inside not only the total market but also what they put money into. For example, when we look at total crypto market cap, this is the capitalization of the entire crypto market. We can see that it rallied up to 3.3 trillion and has been retracing. It's currently 3.09 trillion. But the key to understand, everything is structurally bound. When you understand where the structure is, you can see how price relates to that structure and what it does. There's a huge amount of money to be made by knowing structure. Now, the one thing that we see here at the current time, there's a negative gap below where we pretty much are, around that 3.08 trillion. That's down to around the $2.99 trillion mark. Now, what does this mean? When you get these negative gaps, the entire crypto market can literally fall off a cliff until it hits structural support and then it rebounds. If it can't go below, it's going to the one above. So this creates an idea. If it can't get above here, it has negative structural attraction down to a lower level. Now, we are looking at total crypto market cap, but how you interpret these diagrams is always the same. And this is formed through level 1 and level 2 standard certification. Knowing where the structure is vitally, utterly important. If you don't know where the structure is, you do not know where price will interact. For the bulls to get control back inside the crypto market, they have to rally up past 3.14 trillion and 3.18 trillion. If the bears get control, they're going to push it below 3 trillion. Turning our attention to Bitcoin, because we know as the entire crypto market cap came into resistance, Bitcoin also came into resistance, and we've seen it's been weakening for some time. And this is very important for us to understand. If you know where the structural levels are, you can make money as price comes down. And that would be perplexing to most people to think that you can go long at spot and take advantage of all of this price wave action. But in the Profiting from CTKS Method course, I'll show you exactly how to do that. It's coming out next month. The links are in the description, and if you get the right requirements, you get it absolutely free. Now, what we have to do with Bitcoin is we need to mark up through level 1 and level 2 standard certification all of price history. Now, let's just turn the indicator on from the service because that's all been done for you. You can see around this 92,600 mark. That is a very important area of structure, and we lost it. You can see that the 90,400 is also a pretty key structural support level. Now, what we've noticed is when we got up to around just south of the 99,000, we just didn't go anywhere. That's because the entire crypto market came into structural resistance. We were hoping that we would break through it, and back here we nearly did, but unfortunately we didn't get there. And when you have a number of negative CTKS gaps, it means the price can go down very, very quickly. When this occurs, you'll find your favorite social media commentators will have open mouths and gasping and talking about crashes and all sorts of stuff. Oh, the end is near. That's great for their viewership because people get caught on fear. But you'll go broke if you emotionally trade. Let's put some numbers in here so it's a little bit easier for you to see. You can see this 92,710 level is very important. Also the 90,618 and the 88,685. A lot of people get into crypto because they think they're going to become rich and drive Lamborghinis and Ferraris and they're going to get that tomorrow. This is not the way that anything works realistically in life. What you want to do is to develop a skill that you can just refine for your entire lifetime. There is no doubt in my mind that Bitcoin will reach in excess of $1 million per Bitcoin over time, but it's not happening right now. If you knew that, would you buy at these levels and say, thank you very much for the discount? Or would you say, I'm going to wait for it to go up and then I'll buy at the top? Oh, not that you would buy at the top. To get away from emotional trading, which I just call investing, it's important to know where these structural levels are and how percentages work. For example, the percentage difference between these two areas can add up to a huge amount of money if you're just rolling your trades over and over and over again. I'd like to show you something that I believe could really help you out. These particular trades were done on Bitcoin through Binance Exchange, and they were, as you can see, there's a buy and a sell there, 1, 2, 3, and 4 buys and sells. Now, this was done in yesterday's price action, all of that action that I just showed you. Now, what is it actually? What's the result of that? For turning over literally 1.2%, that was about $580, which translates into about 900 Aussie dollars or about 327,000 Australian in a year. If you were just doing this in and out, 1.2% at a time. And don't forget, that's when a crash was occurring. And this is buying long at spot. You're buying and then you're selling at a higher price. This is why small percentages, when done correctly, will give you a return that just blows people away. But of course, you're not told any of this. You're just told, don't lose money, but not told how to. If you're using gut feeling and instincts to place your buys and sells, please stop doing that. It just means that your profitability, even if you're profitable, will be 1/10 or less of what it actually could be. What you need is the structure. You need to know where price will interact and rebound, where it will hit its head and either go down or go up. One of the things that you want to be aware of, emotional trading, aka investing, is everybody's doorway into putting money into charts. There's no problem in doing it, there's a problem in staying there. And you can see from those trades that I just showed you, they all relate to this price action, and I'm going long at spot with a structural knowledge. In other words, I know what I'm doing because I can see where smart money will step in to buy and where smart money will step out as well. So from this perspective, it's so important to know these areas of structure. I find it really fascinating that many of the influencers out there that will teach you how to trade have about $50 in their trading account. You can literally go on YouTube and you can see so many people just with a balance of $50 or $20 or even $10. These people are not traders. Traders have money because they've managed to master the emotions that are required to be mastered when price goes up and down all over the place like this. When we look at Pepe, Pepe is always structurally bound. Let's pop on Pepe's indicator and check out what's going on. You can see that there's a large level of one structural support that's turned into structural resistance. I'll just put some labels on these prices so you can get a better idea. Okay, we're off to the races. You can see that Pepe interacted with this 1730 level. 1855 is a really important level that Pepe needs to get across to confirm a bullish momentum, especially passing that 1905 structural resistance level. If that happens, it can make its way up to 2109. If it loses the 1730, it could make its way down to 1541. Can you imagine trying to figure out where the sellers would be busy and how powerful they are without a knowledge of structure? Let's have a look at Doge's levels. I've just put the structural labels up here for you to have a look at. Now, how does this actually work? What we need to do is through level 1 and level 2 standard certification, draw up across 3,700 plus days in Doge's price chart. And there's a very special way that we pick the price charts as well. We don't randomly do it. What you can see up here is that retail would suggest that there's a level of resistance just above there. That doesn't necessarily hold. What you need to be aware of is all the charts interrelate and interact with each other. What happens to Doge depends on what happens with Bitcoin and total crypto market cap. You can remember that total crypto market cap and Bitcoin were coming into levels of structural resistance. This plays across the entire crypto market, and the actual level of resistance was this 45.97 and not higher. Also, you can see this much thicker line here at 39.88. That is a very important structural level, and you can see that it was tested, retested, and has resumed down. And when it actually lost it, it moved down very quickly, and the buyers came in at 36.06 to defend that level. For bullish price momentum, we must in Doge get past this 39.88, reconfirm it as support in order to move up to 44.22. If the bears get in control, and they are currently pretty much in control of Doge at the current time, they could drive it down to 36.06. They will seek to drop it below 34.75, but this is quite heavy structure. It's not going to be that easy to do. And this is exactly why you need to know where the structural support and structural resistance levels are in terms of market structure. If you'd like to ditch emotional trading forever and learn how to make money no matter what the market condition is, you can get the upcoming Profiting from CTKS Method structure for absolutely nothing if you meet the conditions. Just go to ctksmethod.org and the links are in the description of this video. If you go across to this Inventor tab and just give that a little bit of click, you'll actually see the Black Friday sale where you can get 70% off TradingView. I'd really urge that you would do that, and that's me just waving hi to you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.